and welcome Optuma users to this second installment of the GoNoGo educational series. My name is Tyler Wood. I'm a CMT charter holder, and as always, I'm joined by Alex Cole, creator of the GoNoGo Charts. How are you, my friend?
Very well, ready to go.
Awesome. So this session is about extending that concept of trend identification that we talked about in the first installment into a more practical application. Let's take a look and see how fund managers and analysts employ these tools in real time. Now, just as a refresher, what we discussed the first time around was that technical analysis can help us avoid subjectivity, emotional bias, can help us stay objective and away from dominant narratives in financial news media. However, a responsible approach uses multiple indicators. We don't want to rely on just one, but as we add more and more of these powerful tools to our chart, we can reintroduce a lot of that subjectivity, and our emotional bias can get carried away when we invite analysis paralysis into our charts. Too many squiggly lines, we can convince ourselves of whatever we want to believe about any given trade. So Alex, talk to us a little bit about that solution from GoNoGo Charts, the GoNoGo trend concept.
For sure. So we know from that discussion that we had of trend identification that we do want to keep all of that valuable information. But we want to do it in a way where we can still look at price. We can still understand what's happening on the chart. So what we've done is we've created a indicator that blends these foundational concepts of trend identification into something that just color codes the price bar. So when you do that, you can get a sense of the trend. You can see price rolling through trends as the color changes. So we know what's happening from a trend perspective. We know what all of those components are combining to tell us. We still get the weight of the evidence approach to stack the odds in our favor, but we do it in a way that is hopefully simple to understand, simple to read. Hopefully it's an elegant solution, and of course it needs to remain informative. And so that's what we have then with the GoNoGo trend indicator.
Now, what's very important about all technical analysis is that we not lose sight of our most important indicator of all, which is price action. Right. So on a chart like this, a weekly chart of the S&P 500, we could see areas of polarity, right, where we found resistance levels multiple times, once broken through, can become areas of support. So being able to identify those key price levels is also important to our work. And we know that fundamental analysis can be very important. The long-term trends are all driven by sound underlying fundamentals of the companies that we're investing in. But it's Mark Abraham who told us that ultimately it's the dollar-weighted collective opinion of all investors that determines whether a stock moves up or down. He's talking about the supply and demand relationship. And that consensus is revealed by analyzing price. So esteemed trend-following investors out there have believed in this for a very long time. And for those of you who have a sound fundamental basis for security selection, we know that technical analysis can be a very strong complementary toolkit to helping you run your portfolio. So Alex, let's just review real quick what those colors mean on a go-no-go chart.
We have 5 trend conditions in a go-no-go chart. We have 2 forms of a go trend. So you can see that we have blue bars, which is the strongest bullish environment. We have aqua go bars, which represents a weaker but still bullish environment. And then we have our no-go colors, which we have a pink for our weak bearish environment and a purple representing our stronger bearish environment. And then in the middle there, you see that we do also have amber bars, and those represent neutrality or uncertainty. Now, this happens when there are not enough conditions being met behind the scenes to be able to identify a trend in either an up or a down direction. And we call those our go fish bars, because we're big fans of the works of Jesse Livermore, and we know he used to say there's a time to go long, a time to go short, and a time to just go fishing when the market isn't giving you enough information to make a sensible trade decision. So we have go bars, go fish bars, and no go bars.
So let's take a look at that in real time, a chart of the S&P 500 on a weekly basis, and we can see that this entire area through 2022 was in a no-go condition, a bear market, if you will. And what's important to point out is that we had a number of very seductive relief rallies. We were all rooting for the US economy and for the stock market. And of course, it's very tempting to want to get involved. But when we look at trend identification, when we think about the weight of the evidence and that responsible checklist, there were not enough conditions being met in this trend model to get us out of no-go conditions. And what that does is it helps us avoid all of the anxiety, the whipsaws, those seductive relief rallies that we can identify as still being in no-go conditions. And of course, you saw it cycle through the neutrality when all of the inputs in the back end are in their zero level or neutral territory before we can identify that a new trend has begun. Now, think about how you were feeling at the end of 2021. And certainly broad-based sentiment was extremely frothy. Nobody thought this market could go anywhere but up, right? Diamond hands, we're holding on forever. We're buying the dip no matter what. Well, there were a lot of people buying dips all the way down and destroying a lot of value either for themselves or for clients. And similarly, here in 2023, a lot of investors' recency bias is that they lost money in 2022 and they're very reluctant to get back involved in the stock market, even though the message of the market itself is that we're making a series of higher highs and higher lows, and this is very bullish activity, right? That is an upward trend, and we are in go trend conditions on this weekly basis of the S&P 500. So one more quick review. Alex, let's talk a little bit about that problematic chart where we had a sensible approach, but we applied many more tools to the chart.
Yeah, this is just an example of a simple process. Like we've said before, this is not complex. And this is the kind of thing that perhaps you would start with, but you would end up with something far more involved than even this chart. This is just using a couple of different indicators on the chart. This has got a few different components of trend identification. It's just got a couple of panels below the price chart, but already you start to lose track of what's happening in the price panel, and the price gets shrunk to the point that you can't quite as easily see those important key levels that you mentioned. And if you were to think about adding other things to this chart, then you can see how quickly you could get out of hand.
Absolutely. And if we were just going to pick on a couple of individual indicators, right, we've learned from lots of professional technical analysts, you don't have just one pet indicator. So for instance, MACD is going to give you a lot of signals for entry and exit as the MACD crosses above or below its signal line, moves above or below zero. How many of those signals do you want to take? And if we think about the GoNoGo trend chart on this weekly basis, we're going to have an entry in 2020 after that COVID collapse. We're going to have an exit in 2022 and a re-entry in 2023. And we know from the research that over trading, getting whipsawed in and out of positions, introducing too much to your process can really be diminishing in terms of your equity returns. Now, we know that these are some longer term charts, and many of you might be looking at shorter periods. So when we look at Charles H. Dow's writings from 130 years ago, the man told us that markets move over multiple time frames, and we can use technical analysis, these same tools in the same ways, on multiple time frames to our advantage. So he was a very accomplished nautical sailor, and he compared markets to this analogy of the ocean. He said that the primary trend, that which is governed by expanding or contracting gross domestic product, by the fundamentals of the companies that we're investing in, that's the primary trend. And he compared that to the tides of the ocean. It doesn't shift based on public opinion or anybody's interpretation of the raw data. That's driven by the very long-term trend. And we can see in a chart of the S&P 500 that generally that has been moving up and to the right, where we're in a secular bull market. Now, Charles Dow also talked to us about the secondary period, and he compared this to the waves on the surface of the ocean, right? So tides are moving on their tempo, and waves are coming in above and below, right? Heavy waves in a rising tide environment can push us well above that primary trend. Similarly, when investors are very depressed or despondent, we can push well below that primary trend. And this is where a lot of technical analysts have made hay, which is by identifying some of that human emotion that governs actual price activity. Charles Dow also told us about the minor trend, the minor period or tertiary period, and he compared that to the ripples on the surface of the water. And this might be the time frame that you trade in, very short term, intraday. What's important about multiple time frame analysis is that we don't only look at charts on our trading period, but we open our mind to understanding what the primary and secondary trend are telling us. We can understand the context that we are investing in, and we can trade in the direction of those primary and secondary trends to make sure that we're on the right side of the trade. So let's dive into this in some live examples. Let's pick on the mega cap name of our day, Apple Incorporated. Alex, talk to us about this monthly chart of
Yeah,
Apple.
I mean, what a trend. If you'd have been involved in Apple stock selection decades ago when the iPod came out and revolutionized how we listen to music, you'd have seen some serious returns. But what's interesting here is that the blend of indicators in the GoNoGo trend were able to continue to paint go bars the entire time. So you can see on all of those pullbacks, GoNoGo trend did reflect the weakness. It does tell us that that trend was weakening. We see those aqua bars every time price pulls back from a high. However, it didn't move out of go colors, which really would have allowed you to stay within that trend. Now, what's interesting with this chart is also that you can do traditional technical analysis. And that's because there's nothing else on the chart, Tyler. So you can take a look at the way price is moving and you can see how clearly that concept of polarity, again, when a high was met and found resistance, each time the pullback then seems to find support at those prior high levels. And it happens over and over and over again in this chart. A new high is made, price pulls back, finds support at the previous resistance or the prior high. And that happens over and over and over again. And you can see that right now towards the top of the chart, we're testing those prior highs again and hoping to perhaps consolidate above those levels.
Now, there are probably some career-ending moves within this Go trend. Clients do not tolerate 30, 40, 50% drawdowns. But what's interesting about using multiple time frame analysis to find our entries on shorter time periods, we can do some of this classical work and see that indeed here we found support at that prior high and are again making a new ascent. So let's turn our eye to the weekly chart, right? So diving back in down a time period from that monthly, where we saw the counter trend, the weakness on the monthly chart. We're seeing that as a no-go trend on the weekly here for Apple, excuse me. And what's really important is that we could think about those multiple time frames to trade around a position. Perhaps we're not buy and hold investors, but instead we want to capture moves to the upside and we want to avoid some of those drawdown periods. So we can look to a shorter time period to do that. But it doesn't stop at the weekly. Alex, let's talk about the daily chart.
Absolutely. And that's just a beautiful trend. You like to talk about trends moving, taking the stairs on the way up. And that's what we're looking at here, just a series of higher highs and higher lows. And, dropping down time frames, like you said, allows you to trade in the direction of the larger trend. And so you could have been looking at that Go trend earlier on this chart and getting an opportunity to participate in that larger trend that we saw on the monthly and, of course, the weekly as well.
Absolutely. And we don't have to stop at the daily. We could look at intraday periods as well, diving into, 1 minute charts, 1 hour charts, you name it, whatever your time frame is. We want to encourage you to, when in doubt, zoom out, take a look at these other time frames to give yourself some context for the direction and the velocity in which you are trading. Now, we've talked a little bit about time frames. Let's talk a little bit about asset classes as well. Some of the currency desks that we use they're looking at intraday charts on their currencies, G10 and others, to help understand some of those technical moves and the technical condition for those crosses. What John Murphy wrote about in his seminal work on intermarket analysis was that not only can you use technical analysis across all the asset classes, but that there's a ton of information in the intermarket approach. So we can look at treasury rates. We can look at strength or weakness in currencies. We can look at trends in commodities and how they might impact our equity investments. And Alex and I, being students of the market through the CMT program, reading a lot of the works of Marcos Katsanos and others who help to quantify those cross-asset relationships. Now, whether or not you are a cross-asset portfolio manager and you invest anywhere and you dabble in the futures markets or currency markets, or you're a strict equity investor, we know there's a ton of information across these markets. So when you're doing your analysis to help understand the context of what you are investing in, you can use GoNoGo Charts to your advantage. So Alex, why don't we do a little round the world look across the asset classes just using GoNoGo trend on these weekly charts?
Yeah, and I just love to look at these charts taking this kind of approach and looking at the different impact that some of these other asset classes may have on equities, like you said. It's all related. And of course, right now, these are weekly charts. You can see the equities are in a strong go. We've seen that chart already in this video. Treasuries on the just the one on the right here, these are prices. So bond prices, we know those move inversely to yields. But you can see that Treasury bond prices have been depressed, and they're still in a no-go at the moment, although they are painting weaker no-go bars as we speak. To the right of that, we can see crude oil. Now, we've talked about crude oil at length. It's just been sort of meandering lower in this sort of slow no-go trend, making a nice uniform series of lower highs and lower lows. But on the crude oil chart, we're seeing that remains in a no-go as well. If you move to the bottom left, we're looking at Bitcoin, and Bitcoin on a weekly, you can see that's been in a go trend. Now, that's a perfect example of taking some of the stress out of that sort of shorter term trading, right? Looking at Bitcoin with weekly charts will have given you some nice long trades that would have been profitable. And you can see that Bitcoin is in a go trend. Gold, of course, has weakened of late. We've seen that on daily charts, but on a weekly chart, we are still painting go bars. Although you can see that there's been some serious weakness, and that's pointed out by the aqua colors there from GoNoGo Trend. And the last one, the dollar on the right, the dollar index, of course, was one of the big trends for so long. It really sort of confounded a lot of analysts, went a lot higher and a lot further than people thought it would. But you can see that now there's some uncertainty creeping in. We've been in a no-go. We are finding resistance at horizontal levels, and it looks like perhaps putting in higher lows and perhaps making some sort of basing pattern, but we can see some uncertainty as we see go fish bars for the dollar.
And so, as Alex always points out, there is a trend somewhere, no matter what market we are in. And the first half of 2022, it was energy versus everything else. We certainly saw strength in the US dollar and opportunities just to hold cash that investors hadn't considered for a very long time. So when we look at the world of ETFs and frictionless trading, we can get exposure to trends well outside our national boundaries if we're global equity investors, and we can look across the asset classes as well. Regardless of what securities you are trading, doing some of this analysis can be extremely helpful in understanding the context within which we're trading. And if you don't have the interest or the time to do a whole lot of global macro analysis every week, you can check that out with GoNoGo Research. We publish twice a week. Monday mornings pre-market, we issue Flight Path to our institutional subscribers. And that note just takes that top-down perspective, starting with the asset classes, working into the sector groups, into the industry subgroups, and then into individual names to help us identify what the highest probability trades are going to be looking like. And then, as we like to practice what we preach, on Saturdays we publish Launch Conditions, which is a large chart pack that helps us step away from the emotions of the trading week and instead just get a bigger picture of what's going on in the marketplace. And you can check those out right at GoNoGoCharts.com. So from all of us here at GoNoGo Charts, really appreciate you checking out this educational series from GoNoGo Charts. If you have any questions, please don't hesitate to reach out to Alex and I, info@GoNoGoCharts.com. And until next time, take care of each other and trade them well.